Alright, so how to decide how many shares to buy? That's a important question that people ask, right? How to decide how to decide how many shares to buy. That's a question that newer traders always ask, right? And it's not always a fixed unit, because a lot of people say, oh, I'm going to trade 100 shares until I get better. Then I'm going to go to 200, then I'm going to go to 300, then I'm going to go to 500. I'm going to trade in fixed, share sizes and increase that way. That's the worst possible approach that you can take, because of the fact that then you're limited to the stocks you're going to trade. Because again, 100 shares of, Zynga, right, is not equal to 100 shares of Apple, right? 100 shares of a stock like, for example, SPY is not equal to 100 shares of AMD, right? So you cannot trade in fixed share sizes, okay? Then some people say, I'm going to, buy the position with the same dollar amount. Now that is doable, right? That is doable, because then you're playing percentages rather than our units. However, for swing trading, I agree with that, but for day trading, I do not agree with buying the same dollar amount in each stock, because again, same dollar amount is not going to get you good amount of shares. Because for Apple, if you're buying same dollar amount worth of SPY then same dollar amount worth of Zynga, yeah, sure, percentages are going to play out, but it's just going to be way too erratic results, because they're going to move differently, right? Because a smaller cap stock might have more percentage moves than a bigger cap stock. Apple might move up $2 for you, right? But that might not be a good percentage gain. Whereas if you get in a small cap stock, that might move big time. Every 5-10 cents is a big percentage move. So you'll have results that are gonna be really fluctuating a lot. Because imagine taking a winner on SPY and Apple with the same dollar amount and losing the same dollar amount in like Zynga, or let's say a smaller cap such as NQ, which can move down 5, 10, 20%. So it's going to be erratic results. So how do we decide now? How do we decide how many shares to buy? Now that is based on a concept called R unit, right? This concept was made popular by Dr. Van Tharp, okay? Not made by me. This is by Dr. Van Tharp. He's a trading psychologist slash other things. So he came up with this concept initially, and then it was popularized and picked up by many other trading firms and chat rooms out there. And it's a good concept if used correctly, all right? If used correctly. It's a good concept if used correctly and if you know how to use it. At the same time, this concept is also misleading, as some other trading firms out there publicize R units, but they don't have any results to show for it. So now let's get back to how to decide how many shares to buy, okay? Now let's say you decide beforehand that I only want to lose $100 in a trade. That doesn't mean you're gonna put in $100 in the trade. That means you only want to lose $100. You don't want to lose more than that, okay? So if a trade doesn't work out, you don't want to lose more than 100. Now how would you decide? Okay, here's how you would decide. Let's take an example of the QQQ today. I called it long 106.50, okay, 50, with a stop at 106.34, okay? That's how we decided it. So that comes up to be about a 16-cent stop loss, right? About a 16-cent stop loss, okay? So now if you wanted to lose only $100, not more, okay? Only $100, how many shares would you buy? It's pretty simple. You take the stop loss size is 16 cents, okay? So now how you calculate how many shares to buy is you only want to lose $100 divided by 16 cents. That's how you would decide, okay? So $100 divided by 16 cents, you get 625 shares, right? But however, we always round it down. So if it's 625, you could do either 600 or 700, right? Since it's 625, I'll rather do 600. Okay, so now you'll take 600 shares. So now let's say now you're in the trade, you're in 600 shares of the QQQ at 106.50. Okay, stock goes down doesn't work out, stops you at a 106.34. Now you're going to lose approximately 100 shares, right? Give or minus, plus or minus the slippage. Okay, now I'm going to lose 16 cents with 600 shares, so you're going to lose just under $100. So now you already predefined your loss. Now when you get into a trade, you will always know what you're going to lose. How powerful is that for newer traders, right? Because a lot of newer traders get in and they don't even know what they're going to win or lose. Now you know. So this $100 now for you is your risk unit, okay, or 1R. Now in the same example, okay, let's say if there's a stock called Zynga, okay, you want to go long that $2.50 with a stop at $2.40, okay. So now you have a 10-cent stop loss. Now how would you decide how many shares to buy? 100 divided by 10, okay. So now that will give you 1,000 shares. Yeah, 1,000 shares. So that's your 1R, okay. Now let's say you sell Zynga at 2.80, okay. Sell target. So you sold your 1,000 shares at 280. What would you make? You would make 30 cents or 300. Or in simple terms, you would make 3R. Yeah, 3 times what you were risking. Yeah. Again, just to reaffirm. Now let's say you have ESPR. ESPR long at 89. Stop at 88. Now it's a dollar stop, right? $1 stop. Now how would you decide? Pretty simple. 100 divided by 1, which is 100 shares. Yeah. Now you would only buy 100 shares of this thing. Stock goes up. Let's say stock goes up. Actually, you know what? Let's just say stock goes down to 88. You lose 100, plus or minus slippage. Or you lose 100. And let's say the Q's also. Let's just say that too stopped out. You lose 100. So you took 2 trades. You lost 1R. You lost 1R. You made 3R. But however, you lost 2 trades. You won only 1 trade, but you're still up 1R or $100, right? So you lost 2 trades. You only won 1, right? That's not a good percentage return, percentage success rate, right? That's what most people out there talk about. They talk about, you know, you should have more winning percentage. You should win more trades than you lose. That's absolute BS. Yeah, because we could lose more trades, but if our winner is bigger than the loser, or in simple terms, if the winner R unit is in multiple of your R unit, you're gonna end out profitable. Yeah. Like I've got about a batting average probably about 60%. Yeah. So I lose 40% of my trades. I lose 4 out of 10 of my trades. However, I still make money every single week, right? Every single month. And that is because that when I win, they're usually bigger. When I lose, they're usually smaller. Okay? So hope that makes sense. If you have any questions, let me know. This was just a short talk about R units. If you guys have any questions, comments, or anything of that nature, feel free to shoot it out in the chat right now, or alternatively you can also email me at unmol@livetraders.net, and then we can answer your questions. So